Good afternoon. Let's do some business, and we are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the news-driven hour right after Ben Shapiro, and just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com, and you're on demand. Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Stocks pulling back a bit today from record highs. The Dow snapping a 4-day winning streak today, while the S&P 500 edged slightly lower after back-to-back gains, also coming off its all-time high. The Nasdaq managed a slight gain. The Dow coming in for a closing loss of nearly 300 today. The S&P 500 slipping 11. The Nasdaq managed a closing gain of 8 points. The yield in the 10-year note, which impacts the fixed-rate mortgage rates out there, moving lower to 3.79%. Geopolitical worries intensifying, fears of an all-out war in the Middle East intensifying, with Israel preparing for a possible ground operation in Lebanon, according to its army chief, as Hezbollah fired dozens of rockets across the border in a missile aimed at Tel Aviv. That was Hezbollah's deepest strike into Israel so far. Addressing troops on the northern border, the Israeli chief of staff for the military said Israel's punishing airstrikes this week were designed to prepare the ground for possible entry and continuing to degrade the terror group Hezbollah. Israel says it targeted Hezbollah weapons and rocket launchers in the most recent attacks. Meanwhile, U.S. forces building up in the region as well. A few more dozen U.S. forces will be adding to the roughly 40,000 troops already in the region, a presence that has grown as the war between Israel and Hamas continued and tensions with Hezbollah have intensified. Vladimir Putin, the leader of Russia, escalating his nuclear rhetoric today, telling a group of senior officials in Russia that Russia would consider using nuclear weapons if it was attacked by any state with conventional weapons. In all this, oil comes into focus, oil finishing slightly lower today after posting strong gains earlier this week when China's announcement of an aggressive monetary stimulus plan sparked a broad commodities rally. Gold also hitting a record high today again, a day after its friend silver settled at the highest in more than 11 years today. Both may be ready for a pullback in the coming weeks, as some analysts say charts for the metal show that what one technician referred to as upside exhaustion. We'll take a closer look at that coming up. Looks like gold climbed to a record intraday high of $2,694.90 an ounce. And silver also has moved higher, hovering at around $32 an ounce. Tesla back in the spotlight, rising today, having its best month this year. Mortgage rates coming down lately. Home price gains have cooled with prices still at or near record highs. We'll get the latest on home prices and real estate this hour from economist Dr. SELMA HEPP, chief economist at CoreLogic, who just released the latest CoreLogic S&P Case-Shiller Home Price Index this week. Big differences between the two presidential candidates on tax policy impacting small businesses, big businesses, and you, the taxpayer. We'll get the latest this hour from taxpayer advocate Grover Norquist, the president of Americans for Tax Reform. But first, the big day here in the 790 KBC studios, because joining us live now in studio is the one and only Jonathan HOENIG. Live and in person, Jonathan HOENIG, Fox News and Fox Business contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. We got the red carpet out for you. Jonathan HOENIG, welcome back to the 790 KBC studios here in Los
Frank,
Angeles.
Thank you so much. It's my great honor to be with you, one of the great business hosts of modern times, to be with your engaged, active audience on such a busy day in the market with so much going on in the market. I mean, you mentioned just the potential for an all-out war in the Middle East. I mean, in previous times, you would see the market shuttling up and down hundreds and hundreds of points on that. So I think there's a lot of risk in the market right now, but a lot of opportunity as well.
And we're coming off record highs here for both the Dow and the S&P 500. Just looks like a slight breather today, given the record run-up we've seen in the month of September, which, as you've noted, historically has been the roughest month of the year for the stock market. And here we are kissing record highs.
And all-time highs, Frank, tend to beget more all-time highs. Doesn't mean the market can't go down, but what I'm noting is something we've talked about for some weeks now. The nature of this advance has changed. It is not the old Mag 7. It's not the NVIDIAs and the Microsofts and the Metas of the world leading the charge higher. It's totally unsexy names like DuPont, Coca-Cola, 3M. These are the names now, these value-oriented names. multinationals, in many cases, they are the new growth stocks. So I don't think you abandon stocks altogether. I just think you look to where the action is right now, and it's some names that might surprise a lot of our listeners.
And this rally kicked off with the Fed lowering rates by that 0.5% just about a week ago, and stocks have hit record highs, and Fed's still trying to achieve that proverbial soft landing and still deal with inflation, which is still running hotter than where the Fed wants it, and now new concerns about the job picture with apparently the latest reports saying that it's harder to get a job these days. So take all that in for us.
Well, Frank, my high school hockey coach, and I was a terrible player, by the way, but he used to say that your best offense is a good defense. And I think for many investors right now, it's okay to play some defense. There's this hesitancy to hold any cash in portfolios. You're not only getting paid quite a bit more than you've ever to hold that cash right now, but I think you're lining up for some good opportunities. So I've mentioned some of the value-oriented names. And Frank, I also think international. Since the Fed cut rates, you mentioned gold, relentless all-time highs. The dollar has gone down dramatically, and that's really benefiting international stocks. So, this has been an area that's been completely overlooked in recent years. There's been periods of time, 5, 10, 15 years, international has outperformed. I think now is one of those times. As the dollar weakens, it's time to buy international stocks.
I think you hit the nail right on the head there. Historically, as we've seen, when the dollar goes down, stocks move up because the weaker dollar makes our stuff cheaper to the rest of the world, and we've seen these multinational companies rally in a very, very big way, sending the Dow to all-time highs. Let's talk about gold some more, and silver too, hovering around $32 an ounce now at an 11-year high as of today, and gold at a record high. Let's see, $2,681.40 an ounce here at last check. Where do you think gold goes from here?
It goes higher, Frank. I mean, all-time highs, people think, I can't buy it here. It's at its all-time high. But the nature of markets is they tend to trend over time. And what we think of as being so expensive, the all-time high, likely than not, is just an all-time high. There'll be another one tomorrow. Now, big moves take time. I mean, I think about the last time gold was really on a bull market move from about 2001 to 2010. Gold went up almost every year. Now, it didn't go up 35% every year, but it went up consistently. So I think now's the time to have a position in precious metals, but don't make it an all or none bet. I mean, Frank, it's something about gold where people tend to kind of get very much all or none. They either everything in gold or nothing in gold. So I think now's the time to have a position in gold, silver, and I've mentioned I'd like platinum as well. PPLT is an ETF that tracks platinum. Always want to consult with an advisor, but if you're looking for something off the radar screen that can really move, I think platinum makes great sense. It's still half of its 2008 high.
Isn't that something? Yeah, and historically, remember the days when platinum was more than gold, right?
Yeah. They used to call platinum the rich man's gold. Now it trades for less than half of the price that gold currently trades. So again, you don't want to make it an all or none, but if you're looking for something that's not being talked about as much as NVIDIA, Microsoft, and Meta, I think platinum is an interesting value play right here.
On the air live right now with Jonathan HOENIG, Fox News and Fox Business contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time, live in the 790 KBC studios with me now. And Jonathan HOENIG, from analog gold, let's talk about so-called digital gold for a moment. On this program, we talked to the biggest fans as well as the harshest critics of crypto and Bitcoin and so forth. Hard to ignore the move in Bitcoin, which has bounced off its recent low back above 63,000 here. What are your thoughts on the crypto action here?
I've been surprised it's been as strong as it's been, Frank. I mean, given the weakness in so many of those technology names in particular, and given the weakness in so many of the Bitcoin miners, and we've talked about Riot and Mara, M-A-R-A, as two Bitcoin mining stocks that have gotten absolutely demolished. So, I have to say, I don't really have a great feel for Bitcoin right now. I don't think it's in a bear market. I don't think it's in a bull market either. So for most people, I think it comes down to position size. If you like Bitcoin, have 2%, 5%, maybe 10% in Bitcoin. But if it goes against you, Frank, and I think this is where everyone ultimately slits his and her throats. If they like it at 50, they buy it at 40, 30, 20. Most people, it's not that they have a bad stock, but they buy it all the way down. So I think it's okay to like Bitcoin at 63,000, but at 59, 58, 55, I wouldn't be adding on the way down. Losers buy losers. That's what John Paulson used to say.
It's more fun when it goes up, that's for sure, and you got to have a stomach for it. What about volatility, by the way? That VIX index had that big spike about a month or so ago, and that's simmered down quite a bit, but given the current environment that we've been talking about here, would you be betting on volatility at this point?
I don't play volatility, Frank. I think it's kind of a difficult trade for most people to make money in. But as I said, I do think it's a great time for most people to just get his and her financial house in order. And the truth is, it's a lot easier to trade, be successful as a trader if you've got your credit card bills paid off, for example. I mean, we're seeing those, all-time high balances on people's credit card debt that continues to go up. So that's what I think now is a great opportunity. It's not sexy and it's not something that's, but get that credit card debt paid down and get 3 to 6 months minimum worth of living expenses sitting in the bank. I mean, if you have that, you are better off than, I'm sure, at least half of every other American. So it's a great opportunity right now, Frank, with the market at all-time highs. Just get your house in order, because I don't know whether it's now or then, but I think we are going to retest some of those lows that we saw earlier in the year. And I think now is a great opportunity, ironically, because the yield curve, Frank, is uninverting. We've been talking about that inverted yield curve for years. Well, now the 2 and 10 is uninverted. Historically, that's when the recession tends to hit. So I'm playing a strong defense to get my good offense.
Excellent points there on the air live with Jonathan HOENIG. And we see the yield in the 10-year note, by the way, at 3.79%. It, too, has pulled back since the Fed rate cut. What about the bond market here?
Yeah, I think yields are going lower, but longer term, Frank, I'm concerned. I mean, when I hear government officials telling me that inflation is licked, and yet we continue to see the dollar going down and gold prices going up, it reminds me again of very much that period in the mid-1970s. Gerald Ford thought that inflation was licked in 1975, 1976, and just 3 and 4 years later, because spending didn't stop, inflation didn't stop. And, ultimately rates went as high as, 12, 14% in the early days of the Reagan administration. So, inflation's caused in Washington. It's not caused by greedy speculators or greedy business people. It's caused by all that proliferate spending. And we're in the midst, obviously, Frank, of a very heated election, and neither candidate's talking about cutting much spending. So I think short-term rates are going down, but longer-term, my God, if they don't cut spending, I wonder if we could see 10% on the 10-year once again.
All right, it looks like they just got a deal to keep the government running here, so we'll take a closer look at that coming up later this hour as well. Is the Mag 7 old news here? NVIDIA, the Magnificent One, has also seen a rebound recently. What are your thoughts about the Mag 7 here now?
Well, again, Frank, these are names that probably seem even more attractive now that they've gone down. And I can't help but be reminded of names like Intel and Cisco. I mean, Intel was the NVIDIA of 1999 and 1998. And in 2000, anyone and everyone owned Cisco systems. I mean, the internet was the future, and Cisco was the internet. I mean, that's how you played it. And I have very much that same feeling now about these so-called Mag 7. I think the AI technology is tremendous, but when you buy a stock, you're buying a valuation. And even with a couple points off the top here, most of these so-called AI names are just trading at extraordinarily expensive valuations. So I'm much more interested, Frank, in a name like the steel stocks. You mentioned some of those names, the steel ETF, STX, I believe. It's breaking out at a new 20-day high. Or DuPont, again, I mean, so unflashy, so unsexy, but really beginning, I think, what could be a multi-year bull run.
Interesting. Yeah, U.S. Steel made news recently. X, the symbol on that one. Everybody knows that one. It's up for 42 cents today at 38.22. Vistra getting a lot of attention. This one has stolen some of NVIDIA's thunder based on its move on the upside. This is a power company based in Texas, right? Up $7 today at 119 and change. What are your thoughts about that one and the utilities overall?
Wow, the utilities have been tremendous, Frank. I mean, they've been acting like growth stocks. Now, why? Well, perhaps it could be some of the fact that interest rates are going down. So you're seeing a lot of, again, names that probably haven't been on the forefront of many investors' minds. Like preferred stocks have been extraordinarily big lately. Yes, you make 5 and 6% on the yield, but the stocks themselves are up 5 and 6 and 7% in just the last couple of months. So I think, utilities are a great example, Frank. People would write them off. Could they say, oh, boring old utilities? Well, what matters is how these stocks are acting. And utilities are acting like growth stocks these days. I think very much the same thing with chemicals. And tobacco as well. I mean, tobacco stocks are acting like growth stocks. So if you don't own anything value, I think you're missing out on really what's working now in today's market.
What about the wacky tobacco? Wacky, right? Cannabis.
Yeah.
Haven't heard too much about it lately, right? And I guess the candidate's starting to talk more about it. Of course, they still haven't resolved the banking issue related to the marijuana business, the industry here. Any thoughts on that one?
Frank, it's a great example of how an industry can take off, but the investments in the industry have already boomed, in effect. I mean, I'm looking at an ETF. It's POTX, P-O-T-X. This is the ETF that tracks the global cannabis market. Now, there's many more dispensaries open now. There's probably even more income now in the industry, but the stock is at a fraction of where it was even in 21 and 22 because the stock's moved ahead of the news. So I always say price is primary, and I think for now at least cannabis stocks are probably best left on the wayside.
Very interesting. Any other specific places where you are putting money now and or taking it off the table?
Yeah, I do think now's the time to think exotic, Frank, and think about places that you might never want to travel and let your money do some traveling there. One in particular is Vietnam. I have to say, Chinese stocks have woken up. I think you can buy a name like BABA, B-A-B-A, that is Alibaba. It's recently at a 52-week high. And the same thing with the Vietnam. VNM is an ETF that tracks an index of Vietnamese stocks. And people say, well, that's very risky. Well, if you use an appropriate position size and you set a stop loss 10 or 15% below, well, you've defined your risk. You've mitigated your risk. So take a smart risk. And for me, some of these emerging markets are the smartest that I can find.
Very interesting. Yeah, so the emerging market suddenly coming to life based on some of those ETF moves. Anything else specifically that looks attractive to you right now?
Yeah, well, more than anything, Frank, patience. I think we want to think that, and not you, but just for investors in general. I think we always want to think, well, what's the move to make? What's the move to make right now? And almost have to think like the market is like a watercolor that never dries. Every day we get a little bit more information about what's the story going to be, what's the play going to be. So take this opportunity, I think, to kind of get your financial house in order, make sure those consumer debts are paid down, you have that cushion of living expenses, then start to look at what's working in the market.
Very, very sensible what you're saying. Before I let you off the hook, after the bell, MU out with its earnings, and that one is up about 9%. That's one of the legacy tech companies. Micron Technology closed up $1.77 today to 95 and change, and moving higher here in after hours trading.
I don't follow it, but I think it's a great example of how you never want to bet against innovation, Frank. When I'm out here in LA, I have to say, there's a lot to complain about, I know, out here, but my God, there's so many exciting new companies coming up out here. Innovative Americans who have ideas, who are raising money, who are coming up with technology that's bettering all of our lives. So never bet against this great country, and glad to see companies that are not even amid all the headaches and all the difficulties with the regulation and the interest rates and inflation, companies are still getting it done for this great country and us as great consumers.
And excellent again, and love having you here. And while we have the chance, tell us more about the book, Price is Primary, How to Profit with Any Asset in Any Market at Any Time.
Yeah, Frank, when I started trading at the floor of the Chicago Board of Trade, what fascinated me was some of the best traders, they didn't know anything about soybeans. The best and biggest traders in the soybean pit they weren't experts in soybeans, but they were expert in trading. They were experts in discipline. And I think that's what most people are lacking when it comes to their investments, is a consistent discipline. So Price is Primary is a pretty radical book, Frank, because we say what's most important is the price itself, not the story or the CEO or even the earnings, but the actual price itself. So it's Price is Primary. It's available at Amazon, and I think good discipline is what most people could benefit from most when it comes to their investments.
Terrific, Jonathan. Well, thank you very much for joining us live here in studio here in 790 KABC. We wish you a great time here in Los Angeles and Beverly Hills and throughout Southern California. You got a lot of fans here, and always appreciate you coming on the show here and coming into the studio. That is Jonathan HOENIG, Fox News, Fox Business contributor, portfolio manager at Capitalist Pig Hedge Fund. And the book, once again, is Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan, thank you again very much for joining us live here today.
Frank. Thank you.
Thank you very much. And right out to the freeways now on 790. Here in 790 KABC. Good afternoon. Stocks pulling back from record highs. The Dow down nearly 300 today, down 293, back to 41,915. The S&P 500 down 11 at 5,722. Also off its record high. NASDAQ managed a closing gain of 8 at 18,082. It's near its record high. The yield in the 10-year note, which impacts the fixed-rate mortgage rates out there, at 3.79%. We'll be talking mortgage rates and real estate coming up shortly with Dr. SELMA, HEPP, chief economist at CoreLogic, coming up in the next half hour. The price of oil hovering just below $70 a barrel in New York. In London, the global benchmark Brent crude moving higher, up 21 cents at 73.11. Gold at a record high today, right now hovering at around $2,681 and change. Silver is above $32 an ounce. Silver hitting an 11-year high today. Bitcoin also higher, up nearly $250 now at 63,400. Ethereum pulling back about 3 at 2,576, and Doge at the moment at 11 cents. And now the latest news for you here on 790 KABC. Mottek On Money continues here on 790 KABC. Good afternoon. Turning now to mortgage rates and real estate. Looks like the rates have come down lately. Home price gains have cooled off a bit, with prices still at or near record highs, though. Let's get the latest now and bring in economist Dr. SELMA HEPP, chief economist at CoreLogic, who just released the latest CoreLogic S&P Case-Shiller Home Price Index. SELMA, wonderful to have you with us here this afternoon.
Hi, Frank. Thanks for having me again.
Great to have you with us here. Take it from the top and tell us about the report you just released.
Well, thank you. So the latest CoreLogic S&P Case-Shiller Index showed that home prices on an annual basis continued to retreat basically in July, and we had a 5%, about 5% increase on a year-over-year basis. But what's more interesting is what happened on a monthly month-to-month over the last few months, especially when mortgage rates went up over 7% in April of this year. That really cooled down housing demand and basically brought down that monthly increase significantly below where seasonally we would see home prices change from June to July. So we see a notable cooling in home prices in July, which means that down the road we'll see that on an annual basis as well. But what what changes significantly at this point is that we had the Federal Reserve do a 50 basis point cut. Mortgage rates in anticipation of that dropped significantly, and they are now basically lowest that they've been since February of last year, which means that a lot of pent-up demand that we've had in the housing market is coming back. We are already seeing pending sales increase on a year-over-year basis consistently over the last month, which hasn't been the case up until this point this year. So buyers are coming back, which means we'll see, again, more pressure on home prices, and we may see that home price appreciation heat up again.
On there live with Dr. SELMA HEPP, chief economist at CoreLogic, taking a look at what's happening here in Southern California. Can you give us the latest readings on what's happening here in the Los Angeles area?
Yeah, so it's been really interesting to watch what's happening in LA. LA has performed really well so far this year in terms of home price appreciation. Clearly, it's a function of there being more demand than supply, though we've seen some improvements in supply, but still there are more buyers out there, which means that pressure on home prices has persisted. And we've actually seen, unlike many other markets, a much stronger appreciation in this June to July monthly change than these other markets. And actually, home prices in July were up 1%. Historically, the difference between 2 months is about 0.8% for Los Angeles. And again, Los Angeles is one of the markets that has continued to see this persistent increase versus other markets that are seeing cooling. So I'd say demand is strong. Home prices continue going up and reaching new highs in LA.
Interesting. So the rate of increase has cooled down, but we're still pretty much at or near record highs here, even in the Los Angeles area. I see a report has LA up 7%, 7.2% over the past year.
Yeah, that's true. So basically, the report highlights 20 largest markets in the U.S., and Los Angeles is one of them. And when you're looking at annual changes in home prices, LA ranked as third in terms of the rate of strongest rate of home price appreciation. The only markets that were ahead were New York and Las Vegas. New York is in many ways playing a lot of catch up since the pandemic, and so is Las Vegas. Las Vegas has been pretty strong over the last year or so, but that's a lot of catching up that didn't happen earlier in the pandemic.
All right, as part of the home price index that you put out, the 20-city home price index, San Diego is on that list too. What's happening there in San Diego?
Yeah, so San Diego leading up to this summer was pretty strong. If you recall, a couple months ago, we talked about San Diego being the top market in terms of home price appreciation. But as these mortgage rates remained high, I think that cooled some of the demand. And so San Diego is actually ranking below Los Angeles at this point. But it's still it's pretty high. It's
up
over 7%.
I see that.
Yeah,
and
yeah.
San Francisco Give us an update on what's happening there.
Yeah, San Francisco is sort of the coolest one of California markets. It has its ups and downs over the last few years, but it's yet to reach the peak in terms of home prices that it achieved during the pandemic. There's a lot of movement in terms of people coming and leaving, and sort of demand still being uncertain in San Francisco. So it's notably lower in terms of price appreciation. It's at half of the pace that we see in Southern California. In San Francisco, home prices were up only 3.4%.
On there live with Dr. Selma HEPP, the chief economist at CoreLogic. And certainly here in the Los Angeles area, we had this ULA measure, this tax that was supposed to impact real estate transactions on so-called mansions, so-called mansion tax that was supposed to fund homeless programs, but it has not lived up to what was promised. In fact, if anything, this ULA, as it's known, has put a damper on all real estate development here based on the reports we've seen recently, resulting in less development of both market rate and affordable housing projects. What's the buzz you're hearing about the impact that ULA is having here on the Los Angeles real estate scene?
Well, Los Angeles continues to be one of the top luxury markets. When you look at nationally, it ranks in top 5 luxury markets. And we do, and when you look at sales activity by price range, the higher price ranges, they're still performing relatively better than lower price ranges. And, the thing is really the affordability. People in lower price ranges are being really hit hard by these high mortgage rates, whereas luxury home buyers tend to be buying with cash, and mortgage rates are not making a significant impact on them. And to some extent, this tax is not really, it's a change, it's a change in a pocket for them. So we still see a lot of luxury sales, basically.
Interesting. And certainly it's also impacting commercial real estate, which is still a sore point here in the Los Angeles area as well as elsewhere, including New York. And the slow return to the office has impacted, obviously, office space. And there have been some conversions even recently from office to apartments. It's been reported in The Real Deal that we also connect with Jerry Sullivan from The Real Deal, who's the editor there. What are you seeing happening? What's the buzz that you're getting here on commercial real estate?
Yeah, commercial real estate is really a slow-moving train still in terms of, how it evolves in terms of transactions and valuations. I think the anticipation of rate cut is helping, and especially the fact that mortgage rates came down, borrowing rates in general came down. And so I think that's going to help in terms of valuation and maybe some of the refi activity in the commercial space. But again, when I listen to commercial economists, they often say that maybe this loom dupe is a little bit overstated. I think there's different types of commercial real estate, right? There's office, but there's also industrial, there's multifamily, and each is performing a little bit differently. And it depends also on location. You can be in central LA, right, in downtown. You can be in Santa Monica, or you can be in Riverside. It performs differently. So it's just really by market. It's very local. It's very by type of property. So it's hard to make any generalizations still there.
Well, it's great that we have an LA-based economist on the air live with us here to talk about this important matter. And if you could get your crystal ball out, Selma HEPP, what do you see ahead for mortgage rates and for home prices here?
Yeah, I think the rate declines have been front-loaded in many ways. Anticipation of the rate cut has already been priced into mortgage rates. So that's why we did see as large of a drop as we have. Going forward, I think the mortgage rates are going to stay here for a little while, at least until the next meeting. Most of the market forecasters still expect rates to remain at about 6% through the end of the year, and then potentially go lower by middle of the next year. I think the forecast at this point is about 5.67 by middle of next year. So hopefully, fingers crossed, we'll see.
Selma, thank you very much for taking the call this afternoon. That is economist Dr. Selma HEPP, chief economist at Southern California-based CoreLogic. Thank you very much, Selma, for joining us live here this afternoon.
Thank you so much for having me, Frank.
Thank you very much. And right out to the freeways we go now on 790 KABC. Mottek On Money continues here in 790 KABC. Good afternoon. Big differences between the two presidential candidates on tax policy impacting small business, big business, and you, the taxpayer. This is interesting. The National Treasury Employees Union, that's the union that represents various federal agents, including those of the IRS, put out a statement recently praising Vice President Harris for increasing the IRS's budget and endorsing her for president. We did see quite a buzz on social media on this. One guy wrote, the IRS Agents Union just endorsed Kamala Harris. That should tell you what her plans are for us. Joining us live now is the one and only Grover Norquist, president of Americans for Tax Reform, who keeps track of all of this. Grover, thank you very much for coming to the line this afternoon.
Oh, good to be with you. And it is interesting that the IRS wanted to, the day she didn't get the Teamsters endorsement, she did get the tax collector endorsement.
Very interesting. And give us the latest on the differences between the two candidates on tax policies.
Well, our friend Kamala Harris was supposed to give a speech today outlining her policy, but the only really interesting, different thing she said today is, of course, she's in favor of raising the corporate income tax higher than China's, higher than Europe's. She's interested in committed to raising the capital gains tax twice as high as China's, higher than Europe's. Some European countries don't have a capital gains tax. And then she wants to add a second death tax, kind of like, which would make sure that all the inflation during your lifetime would be taxed. That's a position she's had for quite some time. She wants to get rid of the Trump tax cuts, which means every American will see their marginal income tax rates increased, because every American who pays taxes saw their tax rates cut by the Republican tax cut of 2017. So all of it, and getting rid of expensing. She wants to do some tax credit stuff, a little measly stuff. I mean, the expensing for new businesses is one of the things that drove a lot of the growth during the Trump years, and the lower corporate rate as well. She wants to get rid of both of those drivers of the growth that we have had over the last several years. And even the growth during her vice presidency was largely still derivative of the successes of the Trump tax cut that they weren't able to undo completely. She did call and say, we ought to have, what's the word for it? Demands bold, persistent experimentation. She promises bold, persistent experimentation. This is, I mean, she's plagiarizing on purpose. FDR, when they asked FDR, what are you going to do? He said, I don't know. We're going to try lots of things. We're going to be bold. We're going to do things nobody's ever done before. We're going to be persistent. If they don't work, we're going to keep at them, okay? And we're going to experiment on the American people. And this is the first recession in American history that lasted 10 years because he took the approach of raising taxes and spending more money and regulating more. But what we do have in America is a way to have experimentation. We have 50 states. You want to know if lower taxes work? Compare Texas and California. Compare Florida and New York. You want to know if the corporate income tax matters? Take a look at those states with higher corporate rates and those with lower corporate rates. Companies, jobs, investment move to states with lower corporate rates, with lower or zero income tax rates. We know that's bold experimentation. California's up at 14. That's pretty bold. New York's up at 10 something, and the guys in Minnesota want to be equally goofy as New York, and so they're up at about 10. And now Vermont's going up to 10. So we got lots of experimentation, and we know what doesn't work. Why does she need to do further experimentation on the whole country when she can look around California and go, this is not working?
Don't remind me. Make a very important point there, Grover Norquist. And President Trump proposing no taxes on tips, overtime, or on Social Security. Looks like the other side has taken at least one of those pages. What about that idea? No taxes on tips, overtime, and no taxes on Social Security.
I think the most important commitment he's made is to extend the successful Trump tax cuts and make them permanent, and to take the corporate rate from 21 to 15. because so many states have state income taxes, corporate income taxes, our 21 is really 25 on average. We need to take that down to 15 to really be competitive with China and Europe. And that's a great thing that he's recommending. I like that a lot. The two on overtime and Social Security are fine ideas. They are rather large tax cuts. I don't know that one could fit them into the first tranche, but as a goal to say to people, since Social Security doesn't pay you back the money that was put in because there's no saving involved. They're taxing your grandchildren to pay you now for something. It's not as good a deal as an IRA or a 401k. What we really need to do is make it possible for every American to have a 401k and IRA so that they can save real money during their lifetime, not get a check from the government after they've retired, which comes out of their children and grandchildren's paychecks the week before. There's not money saved for Social Security. It's not structured that way. But the idea of saying to people on the margin, we don't want to tax you. And that's what lower marginal tax rates does. That's what not taxing overtime does. That's what not taxing tips does. So those are all pushing in the right direction. And I think they're all great conversations to have. The unions hate not taxing tips because they want to get rid of tips, because you can't unionize a restaurant if the bartender goes, wait a minute, you mean competent bartenders who do a good job and get tipped better, we're going to be treated like everybody else and be paid hourly? Waiters and waitresses go, you mean I hustle and I just get paid like everybody else? Quality of service, see it in those countries that don't do tips, would really fall. And then you could unionize them. And that's why the unions don't like tips.
All right.
They want to be able to treat people differently.
Cheers to you, Grover. Thank you very much for that thorough analysis as always. We do appreciate it. That's Grover Norquist, President of Americans for Tax Reform, live with us here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz with Randy Wang. And I'll be back with more at 4 tomorrow afternoon here on Mottek On Money, 790 KBC.
Every week, Michael Rosenbaum is getting deep with someone new on the Inside of You podcast.
Let's get inside of Zach Braff. What is one piece of advice you wish you received early on in your career?
That if you don't go all out for every single audition, 10,000 people are. And I can just tell you, if you're an actor listening, that your lottery ticket is very limited. The other people have a whole lot more lottery tickets.
That is profound.
Inside of You with Michael Rosenbaum, wherever you listen.